Holy smokes, everybody. This is an urgent, quick update. We have just seen a huge flash crash in Bitcoin, and right now, gold is down, oil is down, stocks are down, cryptos are down, everything is crashing right before our eyes. In this video, I'm going to go over some of the warnings that long-term investors, market bulls, people actually normally bullish, are sending warnings that September and October could be the time the stock market finally corrects anywhere between 10 and 20%, and that means other assets like gold may sell off as well, and also other high riskier assets like cryptocurrencies, they would fall even more. Because what you have to know is, do you know what's happened in the months of September and October? Well, the 1929 stock market crash that caused the Great Depression, the 1987 stock market crash, Black Monday, the 2000 dot-com bubble market crash, and also the 2008 global financial market crash. So historically, September and October have been bad months for stocks, and with stocks and so many assets so overvalued right now, this may be a perfect time for a market correction. Okay, everybody, let's not waste any more time. Let's get straight into the charts to see what's happening right now. Okay, first things first, let's cover the cryptocurrency markets, everybody. Bitcoin, something absolutely strange and very weird happened. It's clearly market manipulation. In about an hour, Bitcoin dropped about 16%. As we can see here, this is my time, around 12 a.m., it was 50,000, and then it completely dumped all the way down. Now, CoinMarketCap has 44,600 here, but if I actually go to FTX, it actually shows that it fell all the way down to around $43,000. So there's clearly some market manipulation going on with Bitcoin, and we know this happens a lot. But this is very, very quick, very sharp. I was watching it actually happen live. I was just checking the markets, and I thought it was a glitch, an error or something. That's how fast it dropped. And also that shows it's clearly market manipulation. It bounced from around 43,000 all the way up to 46,000 in about 20 minutes. So just some of my thoughts, opinions, and theories why this could have happened. Because normally what I see in the cryptocurrency market is when things get very bullish, a lot of greed gets in the market. Well, what happens? A lot of leverage gets in the market. People, they make profits just by buying the coin. Then they say, oh, you know what? If I use, 5x or 10x leverage, I could have made even more money. So then when leverage gets up in the market, what do we see? We see, in the cryptocurrency market, the whales, or really we can just call them market movers or market makers or big institutions. When they see there is a lot of leverage in the market, well, then that's a perfect time to manipulate it, because then all of a sudden they can dump it, and everybody that's using margin, they get liquidated. And we also saw this happen when Bitcoin skyrocketed from 30,000 to 40,000, and what kind of started this rally from 30,000 to 52,000 was a bunch of shorts got liquidated. When things were looking like, and even I thought that Bitcoin would fall to 24,000, when it was hovering between that 28,000 level and 30,000 level, we saw there was a lot of people shorting Bitcoin. And so again, the whales, the market movers, market makers, the big institutions, they saw there was a lot of leverage with short positions. So then they brought up the dip, and I'll go to the charts here. We can see here around the 34,000 level, it spiked all the way up to around $40,000 on the 27th of July. And that's kind of what started this rally here. But again, I've been saying that I do think we are in a bear market. And by bear market in Bitcoin, what I mean by that is I don't think we're going to be hitting all-time highs. And I think we'll be in a bear market for about a year and a half, like it normally does. About a year and a half after the halving event, that's when the reward for Bitcoin gets dropped in half. And then I think we'd enter another bull run late 2022 or mid 2023. Because when we go to the last bull run in 2017, we can see here there were massive dips and there were rallies in the bear market. And this is when some people may think that, we're in a bull market again. But again, it was pumped, then dumped, then pumped again, then dumped. And then we just set in lower highs and lower lows. But hey, I could be wrong. That's just my thoughts and opinions on the Bitcoin currency market. I still like Bitcoin. I'm still a believer in Bitcoin long term, but you have to agree we do get a lot of greed and euphoria very quickly in the cryptocurrency markets. So it's always good to keep a level head. And, if you did buy the dip today, if you did manage to get it at 43, 44, if your exchange was actually open, lucky for me, I'm in Australia, so my exchange was open. It is a good short-term, trading opportunity, but we could definitely fall lower from here. And we'll have a quickly look at some other coins. Ethereum obviously hit harder normally when there's a big dip in the cryptocurrency markets. The altcoins get hit harder than Bitcoin, and they'll also rally harder in the bull run. Cardano down around 13%, Binance 15%, XRP 15%. Dogecoin, a favorite coin, they're getting slaughtered, down around 18%, and all the other altcoins are down pretty heavily. And if we have a look here, the Dow Jones Industrial is down around 0.7%, so definitely not being hit as hard as stocks. But we'll go ahead and have a look at gold here. Gold is down around 2% today. We can see it's making a bit of a comeback. But again, gold's been hit hard as well. Even oil is down. Silver's down around 2%. The S&P and the Nasdaq, they're not being hit too hard. The S&P is just down around 0.3%. But I'll just get into this article here. And it says here that, market bull Tom Lee predicts a record September, but warns that a 10% correction could come in October. And it's not just him. Market record price action is mimicking late 1999, and it could spark a 10 to 20% correction. Long-term bull Julian Emmanuel warns. So what are we seeing, people? We're seeing even the bulls are starting to admit, hey, things are getting a bit overvalued. Things are getting a bit crazy, and we are due for a 10 to 20% correction. And again, like I said earlier in the video, September and October have historically been bad months for stocks. If we do see a big drop in stocks, then also cryptos will fall harder. We may even see a bit of a drop in gold where people are covering their margin positions. So Tom Lee goes on to say here that he thinks the window where we could start to have a potential 10% pullback is in October. So he says he attributes these risks is to the vulnerability with the fiscal and monetary policy, which what he means there is, will the Fed taper? Will inflation get out of control? Will they have to lift interest rates to get inflation under control? There's a lot of uncertainty there, and also a lot of uncertainty around how they're going to handle the pandemic with surging cases. But there's also another risk, he says here. That's really when the debt ceiling rhetoric comes back. And if there's going to be concerns about the debt ceiling, the bond market could panic. He says when there's upheaval in the bond market, it typically spills into stocks. But in the meantime, Lee indicates he would be a buyer. And hey, if we do get a 20% correction, you may see Lord Bear, Michael Invest, buying the dip, the real dip. But again, going back to Julian Emmanuel's prediction, he's warning that the market is mimicking 1999 and it could spark a 10 to 20% correction within the next month. He says, be very much aware of the fact that if and when it reverses, the consequences could be severe. And he says something here, and I couldn't agree more. We're in a time when the impossible has really become commonplace, said Emmanuel. If you had said inflation would be at 30-year highs, the 10-year Treasury note yields would be 1.3%, while the S&P would be at its highest level a year ago, no one would have believed you, me, or anyone else. And that's completely right. These Treasury yields don't make sense. Why would you buy a US 10-year Treasury with a yield of 1.3% when we've got the CPI, the official inflation data, at 5.4%? Real yield should be much higher, but it's because the Federal Reserve's buying US Treasuries, they're keeping the yields low and the bond prices high. And what would have happened if they didn't intervene and that the yields went higher, well then that would have consequences for stocks, because if people can all of a sudden get 3 or 4% yield, then maybe they will hold bonds instead of risky equities. And he goes on to say that investors with a long-term investment strategy should embrace a setback. And I completely agree. For markets to be healthy, they need corrections when things get overheated. And if you're an investor, you may say, why are you trying to say my stock should go down? Well, this is actually a great opportunity for you to buy a good dip and to get stocks at better deals, because really you make the big gains during the corrections. You don't make big gains buying when markets are at all-time highs. He says, be mentally prepared to buy down 10, 15, maybe even 20% because the long run trend is higher and pullbacks having been bought have been rewarded all along the line. He says, we all know that September has a record of being a difficult month to navigate that ultimately yields to the buying opportunity in October. So everyone, is history going to repeat? Are we going to see a major pullback in this overinflated market? It looks like it's happening today with Bitcoin. You know, we can get a 20% reduction in Bitcoin in a day where it may take a couple of months for stocks. But could history be about to repeat and the correction starts late September or early October? Now, for all my loyal viewers and subscribers still watching, you're awesome. This was just a quick update with what's happening on the markets today, maybe some reasons why it's happening, but you let me know your thoughts below. Thanks for watching. I'll see you in my next video.